Hello everyone, today I'm going to be talking about why the Chinese EV market stock was trading low during this week. But before we get started, you know what I'm going to ask, please subscribe to the channel and give me a thumbs up, it really helps the channel. And without further ado, let's get started. It was not immediately clear why NIO's shares were trading lower. There was no negative news from the company at all. On the contrary, earlier this week, NIO reported record deliveries in November and said that is accelerating plans to boost production due to the high demand. Everything was going right for NIO and Li Auto and XPeng, then seemingly over one night, the table turned down and NIO stock started falling. Now shares are plunging once more without any major company news. So what do you need to know about NIO stock and why is the Chinese electric vehicle maker struggling right now? To start, investors should understand the broad narrative. NIO, along with the Chinese EV makers XPeng, Li Auto, has been performing very well in 2020. This is because electric car stocks red hot and Chinese market is rapidly growing. It also means that beyond specific company announcements, these three stocks tend to move all the time together. So the reason number one, the threat of regulation. Last week we saw a similar plunge in the three leading Chinese EV stocks. At the time, many investors were worried about government regulation. The Chinese National Development and Reform Commission asked its local branches to submit details about electric vehicles projects, calling out two companies in particular. It seems the government was interested in levying regulation. This would make some sense as the market continues to explode. Although US investors are familiar with NIO and Li Auto and XPeng, there are hundreds of EV makers in China, and even further, these EV makers continues to push out models, hundreds of models every month. Although regulation would impact the industry, there is no indication that NIO is explicitly at risk at all. Plus, as we reported earlier this week, NIO was featured on Chinese TV program. This suggests the company will continue to have national support. Reason number two, the listing threat weighs on NIO stock. Earlier this week, another reason for a plunge emerged. On Wednesday, the U.S. House Representative passed the Holding Foreign Companies Accountable Act. At its core, this bill would allow U.S. stock exchange to remove foreign companies if they fail to comply with certain audit processes. Almost immediately, some investors thought this meant NIO stocks would soon be kissing the New York Stock Exchange and saying goodbye. Sure, there is reason for investors to be aware of this legislation. However, it could actually be a good thing, as we have seen with Candy Technology, ticker symbol KNDI. Sometimes investors chase up equity before they really understand the business. When the short seller report comes out and LJ's fraud, everything turns upside down. Reason number three, NIO falls thanks to peer weakness. A last reason for a plunge in NIO stock today is likely that XPeng and Li Auto are struggling. Yesterday, a UBS analysis downgraded XPeng stock. Li Auto stock is falling Friday after a public offering of a common stock that put shares at a 10% discount. Although the actions of XPeng and Li Auto do not directly affect NIO, many investors consider these equities in the same market. That means when analysts criticize XPeng, NIO pools might take it to heart. So all of these three stocks are moving together. If one of them moves up, all of them will move up, and if one of them go down, all of them will go down. So that's it for today. I hope you enjoyed the video, and see you next time, guys.